and he's Cowboy, and we are listening to the Algo Factory Tech. And if you're thinking that this is not for you, think again, because whether you know trading or you don't, whether you suck at math or you don't, and you have all these apprehensions and all these fears, should I, shouldn't I? What should I do? Listen, this is one of those things that if you learn it, it can be absolutely proficient and monumental for you and make a huge difference in your bottom line. Join us at algofactory.tech, where we show you not only how to trade, but to build the very algorithms that will trade on your behalf while you have a life. It's amazing. And with that being said, Cowboy, let's get into it.
Oh yeah. We just had the CPI come out, so we'll probably we'll talk about that. I went ahead and just took a quick trade. I don't like to put a lot of money on these these economic day type signals, right? Because it's just it's a little gambly, but with CPI it's a different story, right? So we'll talk about what I just said. We're going to want to expand on that just a little bit. And I've already taken a trade, and I may add to it. The thing about the CPI versus other economic data. So you got these. Oh yeah, today's drip day, isn't it, V? For the I'm reading Valley Girl says. I'm interrupting myself. So just
Yep. Today's the day.
nice. Yeah. So, and I think Valley Girl, she's either excited about Drip Day or she's reciting lines from a Sublime song from back in the day. One of the two. I don't know which one it is. But either way, though, I got the QR codes on the screen. Also, the website is in that same message. If you want to come check us out, www.algofactory.tech. $49.99 is our introductory offer. So, we're not going to keep that price forever. So basically what's going to happen is we're going to double or maybe triple. Who knows how high we're going to take the price, because we got to keep the doors open. And right now we're not doing that. We're actually doing this as a loss leader. So, that's kind of what the price is right now. If you're able to get in, that tier of service will always be $49.99 for you, even though we may triple it or even more for other people. So it's if you get in while it's this price and you don't let your membership lapse, you will always be able to lapse. I mean to say, you will always be able to keep that price as long as Algo Factory exists. And I don't plan on shutting her down. Not for a while. I don't shoot, man. Might even go forever. Algo Factory to the end of time.
Yeah, I can picture an entire Algo Factory Academy that exists.
Oh yeah, we're doing all kinds of stuff. I mean, we got all kinds of stuff coming out. Like we have things coming out that we can't really discuss, but it's going to have to do with algos that I personally have built, and it's going to do with access to those algos. But I can't say any more than that. So we'll leave that right there. But I do have. I mean, I've shown on this, even in the free, this particular show that we're on right now, I've demonstrated my algos. What do you call it? Success rate. Like everybody's seen it. And when you have something that works, it's always better to build your own. But hey, man, in the meantime, if you can, work something that brings in some income while you're building, that also helps as well. So that's for the future. Right now, what's interesting is what's happening in the charts and what's happening in the economic data world. And what I mean by that is today might be the biggest day of the month when it comes to economic data, like announcements, if you will. And that would be the CPI. So, if you're looking at all of the like the news and the economic news and everybody's opinions and all that kind of stuff, the biggest, most important kind of data that everybody is paying attention to is the CPI. And that's the Consumer Price Index. So basically, you're looking at inflation and measures of inflation and the government data that is going to come out based on the inflation numbers. Now, of course, we do talk about being pragmatic. We know that the government data numbers are not necessarily real. We know they're fudged, but that does not matter. That's actually, whether or not they're real is immaterial to trading, at least to technical trading in a very strict sense, right? What is material to technical trading is whether or not this data is going to affect the charts and how it usually does. And it's something that we spend a decent amount of time on because in the world of trading, there are two ways to handle news. there's trading it and there's not trading it. And I tend not to trade it. Or if I do like I did today. I just put a little tiny bit of money on there and I don't worry about it if it goes away. So, the data, though, we're going to take a look. I just want to put this link up for everybody. Here, give me 1 second on our Discord. All right, so that link is up. And let me go over to the economic data page and share the screen so we can all see what has been happening. All right, so let's see here, share screen, entire screen. Okay, so let's see, am I zoomed in properly? I am. You're looking at the CPI data. This is forexfactory.com. That's the website that I use to gather data. If you're using TradingView, like I do, which is our software that we use for charting and everything else, the data's on there as well, and it actually loads it onto your chart. But I do like how concise these pages are, and the data does, the data really does kind of, I don't know, it's just quicker to read on this for me. Maybe it's because I'm a codger and this is what I'm used to. But you can see the CPI here came out a little lower than expected, and the unemployment claims came out higher than expected. And those are, like, if inflation is coming down, in a sense, that's either disinflationary or even deflationary. And I think this is closer to disinflationary. Okay, so let's look at those terms, because you're going to hear those terms in the news. You're going to want to know what in the world that means. So inflationary is obviously, that means the dollar is losing value, prices are going up, right? And then they're going up against purchasing power. So that is inflation. I think we all kind of know what that means. If we don't, then that's a real easy thing to look that up. We're not going to spend time defining that. Now, deflation is the opposite. So deflation means prices are going down. It's oftentimes the result of economic problems. It's the result of, the opposite forces of inflation. It's the result of a lack of innovation in the economy. So there is an innovation cycle to look at on the high time frames, on the long term. So, for example, like in the like late 80s, early 90s, we had the information and technology innovation cycle, right? So we had the internet come online for most people, and when that happened, we had the dot-com boom, and there was a huge innovation cycle with the internet. Business underwent changes that had not, major changes, like a change to an order of magnitude or 2 or 3 bigger than any change that it had seen before. And it had to do with information and technology. Well, those changes are sort of coming to, the utility that the market is seeing as a result of those changes, that utility is starting to wear down. And what I mean by that is the effect of those changes on the price of goods is starting to wear off, right? The internet has done pretty much what it's going to do. At least that part of the internet innovation cycle has done what it's going to do for the economy, right? We're not going to see a whole lot of change from that particular innovation in information and tech, right? There may be other innovations that start a whole new cycle, but for the last 10 years, it's pretty much been what it's going to be. You have the AI thing that's kind of coming online, and that is causing some things to go up. You're seeing, stocks kind of raise up on that. But AI, I personally see it kind of as an extension to the prior information and technology super cycle. I could be wrong. But not super cycle, but innovation cycle. So the inflation that happens as a result of those innovations, that inflation begins to become more financially based than based on innovation. You first have the innovation, you have a lot of money that gets made, and that money that gets made gets reinvested into the economy, and pretty soon you kind of have the economy and the balance sheets growing and shrinking based on financial reasons, financial forces, as opposed to actual innovation and technology. So, and according to the Kondratiev cycle, what you have is, and I'll put that up on here. I'm going to put that up. According to that cycle, what you have is less interest in working for your money and more interest in trading for your money. That's an easy way to put it. It's people are making money based on their assets growing, as opposed to, like, say, going to work and actually doing something productive. And as that attitude grows, the economy has less and less room for that. And eventually the without innovation, everything stalls, and all these people who are just making money based on trading and not trading like we trade, but more like investing, right? Those people who they buy stocks and their stocks go up over a long period of time. I'm not talking about what we do, which is like day trading and swing trading and making money on the way up and making money on the way down. I'm more talking about the people who are just buying stocks and letting their 401ks, they're asleep at the wheel. So that whole way of making money, the energy that makes that work goes away because the innovation has kind of run its course. And what you have is kind of where we are now, where they're just kind of messing with, what do you call it? That they're playing around with like, new financial instruments, debt. You got V that always talks about the fire economy, that kind of thing. And it's not real. You're not really making anything. So let's see, I'm trying to open up this Kondratyov cycle chart for everybody to see. So that said, we're at a point, I think, see, this is the information technology. This goes up to 1990, right? Which is back here. And then as time starts to approach 50 years later, which is kind of where we are, this right-hand side of the cycle where you see price kind of, or not price, but essentially price, you see the innovation start to wear off. And we're at a point where the inflation may have run its course, and without kind of playing with these financial instruments, we're going to start to see deflation, right? So how does that relate to today's inflation numbers? Well, whether or not these are real, there's some reality to them. And you're going to see as time goes on, the inflation rate may drop a bit. Now, what people don't want to talk about in the news, and V the Grill is going to kind of, I would like V to explain this because I think he's a little better at explaining it than I am, or at least it's a little more exciting, if nothing else. If you have too much deflation, that will not do for our system, because our country and our system is based at least 50%, if not more, on like financial instruments, and like
it's like 80-90%, bro. I mean, I've been doing a lot of deep dive the last several weeks. I've been talking to a prominent economist, and I'm gonna be having him on the show one of these days. Just been breaking my brain over it because it was always something that's always mystified me. Like, once you realize the GDP numbers are complete bullshit, right? Once you realize, like, John Williams over at Shadow Stats, uncorked that entire myth back in the early 80s, and he discovered the GDP numbers are a joke. Then you realize why they're a joke, right? Okay, fine, it's fake, it's bullshit, but why is it bullshit, right? Why is it that when you have housing prices, like houses that should be like $300,000 are going for $800,000, completely pricing people who basically pricing labor, meaning people that have jobs, out of the housing market? Why is that a net GDP gain? Why is it that when the meatball that is in the White House talks about canceling student debt, and you have one side of the aisle saying, no, we shouldn't do that, the other side of the aisle is like, yeah, we should do that? And why would that be a net positive on GDP, right? If they were to, right? What if, like, why is it that when you have a late payment charge on your credit card, or your debt goes into collections, do you realize that that's actually counted as net positive GDP? Do you realize in places like freaking like Switzerland or Sweden, where I don't know which one of these European countries are, but where prostitution is legal, where they're counting drug use and prostitution as net positive GDP? Like, why the hell is that? It's all part of the speculative economy, right? The reason why your housing prices are going up all the time, the reason why the cost of living is going up all the time, is to service the speculative economy. What is really the speculative economy? Let's define that. The speculative economy is an economy that was defined by Adam Smith and defined by several other economists as known as the rentier economy, or the rent-seeking economy, right? In other words, if I could break it down for you folks, we have been living off the rent checks that the dollar has been collecting the last 50 years as world reserve currency. We've been living off the rent checks that financialization has done for those who own assets, right? Because if you look at the top, 0.01% of the 1%, it's all about owning financial instruments.
They look on the screen.
There you go. Yeah, what is renting? Exactly. And it's all about owning like financial instruments. It's all about owning a derivative. It's all about, like, for instance, a company in America, because we're a speculative economy, right? This is why manufacturing will never really come back to America until the entire economic system has been kicked over. If you're a rent-seeking economy, where you're a rentier economy, where you need the payments that are coming from interest rates, right? Payments that are coming from financial instruments, payments that are coming from equity, right? And capital gains. If you need that, and let's just say you start a manufacturing plant, right? When that manufacturing plant gets big enough, you ever ask yourself a question? Because I know I have. I'm like, gee, they made like $3 billion profit. How come they're not putting more money back into R&D? No, they're not. They're putting more money into what?
Their financial own stock value.
Bingo.
Yeah, they're buying back their own stocks.
Bingo.
But they're forced to, though. They don't really have a choice, because that's the only way to stay competitive in the current world.
Exactly.
So look, this is a game. Okay, so this isn't like they're evil, and there might be some bad people who are like.
No, this has nothing to do with evil. This has everything to do with the fact that we've put ourselves in a hole. We've put ourselves in a hole, and they're forced. American companies are forced to do that, because what do they need? Like, think about this, right? Go to your grocery store. Nobody realizes this, but your grocery store, your supermarket, is a system that is completely run on what? Credit. Credit to pay the employees, credit to buy the inventory, credit to buy the produce, credit for everything.
Guess what the cowboy uses when he goes to the grocery store to pay for his groceries? Green dollars, folding money, cash.
Yeah. So
always cash. That's so. If they're going to run on credit, and we understand that running on credit is kind of a problem. That's actually not healthy.
Everything is lines of credit, right? Nobody's using real dispensable cash, especially in the corporate world. And what is the whole point of all these companies? Is to what? Create or go public. And once they go public, is to what? Pump up their stock. Oh, yeah. It's not to physical production. And why do we have this? We have this because in America, all right, in the last 50 years, banking has in the last 100 years, banking has shifted from being a public commodity for the public good into the, and when you have something that's a public commodity for the public good, you have a physical economy with physical industrial production. And there's a difference between industrial capitalism, which is real capitalism, and the bullshit that we have, which is financial capitalism. It's a stark difference. And when loans and finances and banking is geared towards physical production, physical industry, you have what? Real mark to market. You don't have everything that's completely screwed up and skewed up.
Hey, we're in the beginner class, V. Can you define for the beginners mark to market?
Yeah, mark to market is this. If I say that, I'm sitting on my desk and my desk, has a price attached to it, right? And that price is the actual price that the market dictates because it's the actual physical price. And in the olden days, right, especially in commodities exchanges, I would sit across from, let's just say, Cowboy, and we'd say, hey, look, man, this desk or this piece of wood right here is worth X amount of money. And we come to an agreement. Why? Because we are the ones buying and selling. We come to an agreement that this desk or this piece of wood or this commodity is worth X, is worth this much amount of money. That's mark to market. That's real price discovery. And to have a real market, you need to have what? Real price discovery. Guess what we don't have anymore these days? Real price discovery. This is why assets are so far removed from their underlying value. It's the most stupidest world we live in. And this is why you can have 40% of the companies on the bloody Dow that make no money. It's crazy.
Oh yeah, these guys put the ass in asset.
Oh my God, yeah. And this is this is why we're in a dangerous phase, folks. A dangerous phase.
Yeah. So that's, and the rent seeking behavior was one that I wanted to make sure people are getting a handle on, because I'm actually about to take a trade right now. Hold on a second. I don't know why my it's so weird where my my spread went on my trading station. Market status.
Trading
No.
view's been acting weird last.
Yeah, it certainly has. I don't know what's going on with this. Let me just I can do this. I don't know. It's very odd. I'm gonna close trading view on this terminal down here. Let's see. Yeah, it's a funky time to trade because of this, data that just came out.
Mm-hmm.
But I would like to do it. But for some reason, you see this red and blue up here? It's not on my terminal, and that's a problem. And I didn't erase that. So, you know what's going on. Might be because I've zoomed in. Let me see real quick. If I zoom out, if that fixes it. Yeah, okay, it's just because I zoomed in. It's funny. All right, let me reopen that then. And I'm not ready to take that trade, so we'll worry about that later. Rent-seeking behavior is an interesting concept. It's something that we probably should understand. Here's the thing about like being a trader. It's, I get stuck in the charts. In fact, I don't really have a lot of time to watch the news. That's why I partner up with somebody like V, who has a grasp of the macro, and as good of a trader as V is, it's his macro has been pretty much spot on. I mean, I've been following V for before we even worked together. I think it's been 7-8 years, and those macro calls are on point. To be able to call this is going to happen in a year, I mean that can give you a basis on which to form your alpha thesis, right? So and what I mean by alpha thesis means like my short-term trades. So I'll use high-term data as a bias for short-term trades. So if, like, say V says the Dow is probably going to go to this number, I'm like, okay, that means that for this period of time, the stock market and all the relative, currencies and everything else, that's all going to go up or it's all going to go down. And then so I'll trade in that direction. In the short term, I'll just look for price to kind of, maybe if it's going the wrong way, I'll wait till it goes the right way, and then I'll make that trade. And so, using high time frame data is something we actually covered. I think it was yesterday. I think I made a clip about it, or it was the day before. Yesterday was trading psychology. So if you go to our YouTube channel, though, 2 days ago, you'll see where, some trading psychology was applied, and that had to do with some other items. But using high time frame bias is something where you can kind of understand, okay, well, price wants to go this direction, right? And you can see that because in the high time frame, that's where it's going. It's in the middle of kind of a pullback along that road. And so having somebody like V who has a grasp on the geopolitical implications of the market generally, and also a deep understanding of, say, what's happening in the gold market because of your participation in precious metals and crypto. If as a person in finance, like, you're going to use a team, right? You're going to need a team, and a great team to have for, if you want to be like any kind of a trader, whether you want to trade on a higher time frame or whether you want to actually do like we do and trade, like, say, getting a trade on a Tuesday and get out on a Friday, or getting a trade at 10 a.m. and get out at 11 or 12 a.m. Either way, you can come over to Algo Factory and come talk to us, come see what we do. We're very affordable, and we, as you can see, have a grasp not just on looking at charts and pulling a few $100s out in a few hours or a few days, but we also have a grasp on what's going on in the higher time frame, which makes a very big difference. So if you go to that website you see on the screen, or you zap that QR code, that's what is going to allow you to learn what we do, how to find us. And again, $49.99. I mean, look, I know our competition. I've used our competition. They cost at least 5 or 6 times as much as we do, and we offer way more than they do. This price right here, this is nothing. If you don't join at this price, in another year, when you realize, oh my God, the crypto market, oh man, it's going up. I wish I knew how to trade, right? Because the chances are, with the 4-year cycle, chances are that crypto is going to start really taking off about this time next year. Actually, it's probably sooner than that. There's a good chance that's going down. It's not 100%, but it's how things have always worked with the crypto cycle. And we do cryptocurrency in here. We talk about it certainly. We have a lot of people who trade it. I trade it. So it takes some time to learn how to trade. The basics you can get in a pretty short amount of time. The algo building, it might take another few weeks or few months. How much time you have is going to determine that. But if you get the leg and the groundwork in now, if you do it now, if you take a few months to learn how to trade, if you ask me, my opinion, and it's just my opinion, and it's not investment advice, but I think that about this time next year to be shooting fish in a barrel. I think it's going to be so easy to make money in places like crypto and places similar to it. And if you don't, if you haven't worked with us, then you're going to wish you had. And the problem is, by the time you want to work with us next year, our price may have tripled. And, just getting in now, it's almost like an investment because you're only paying $49.99 a month instead of maybe $149.99 a month. It's, even if you don't plan to use this for a few months, it makes sense to actually get in. And I'm telling you, I've been doing this a long time. I have the formula down, and we're going to be expanding. And those who are with us early on are going to always have better deals when it comes to the manner in which we expand and whatever we add onto the service. So that's what I have to say. It's 7 a.m. And we'll continue the conversation about rent-seeking behavior. And then we have drips. Today is a very special day. It's as often as we can. News comes as it comes, but the gorilla being so well placed, as I described before, in the higher echelons of crypto and precious metals, the gorilla gets information and intelligence that people don't get. And it's not like it's privileged. The gorilla's allowed legally to share the information, but we do it with a very small group of people because sharing it with a large group of people actually can kind of cause some problems, not legal problems at all, but other kind of issues. So if you want to be a part of that, it's generally 2 or 3 times a month that we get this drip session where the gorilla drips the intelligence. And again, algofactory.tech is the only place you're going to get that. And it's like, so I know the last time you did it was freaking mind-blowing. It was amazing. So I'm going to go ahead and stop talking. Gorilla, can you give us that send-off so we can hop over to the private and do the drips?
Absolutely. Folks, follow us over there. Listen, don't waste your time. Don't waste your life. Do something epic. Make something positive for yourself. Join us today. Algofactory.tech. We'll see you in the other room.